Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to talk about what is a stock and what is the stock market and how those really came upon us and what it is today. And so if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. As you can see on the side of our screen here, we do have the portfolio up. And we will open a referral in there to see what we got. But we are going to talk about what is a stock. In order for us to understand what is a stock, we need to go back in time to the colonial ages of like the 1500s, where ships were crossing the oceans and they were exploring new places, and merchants were trying to find foreign goods like silks, spices, and trying to make a dollar. Back in those days, you know, not a single merchant had enough money to build a whole ship and pay the crew to cross the ocean, the Atlantic or whatever it is, or go fund, you know, a ship to go find new exotic goods. And so what started happening was all these merchants started coming together and investing their money together, so in a pool, so pooled investments, and started building these ships together, investing in ventures, they called them. And so that was coined as the joint ventures. And so you'd have these merchants would have shares in these companies, these ships, to make a profit. That was the start of ownership of shares. When this became known to the public, it became a very popular idea, and these joint venture companies started popping out of nowhere, more and more and more, and it just became a big marketplace for investors. And so all these investors started selling their shares to new investors or with each other, and they needed a bit more organized place to do it, so they started taking over coffee shops and doing it in there. And so that was kind of the concept and the birthplace of the stock market. And eventually it got so busy that they just took over the coffee shop and renamed it the London Stock Exchange. Now we know what a stock is. It's ownership of a company. The stock market is a place where investors buy and sell their shares. Now, you probably noticed that I use stock and shares kind of interchangeably. Stocks are the ownership of the company is referring to ownership of the company, and shares are referring to the unit of measurement. So to give you an example, you could say I own stock in Tesla, which means I own ownership of Tesla. And to be more specific, you could say I own 50 shares of stock in Tesla. So hopefully that makes sense to you, and that's the difference between shares and stocks. They are not the same, but I use them interchangeably in that sense. In the old days when that happened, you know, when they started taking over coffee shops and things like that. Now in today's world, there are exchanges all over the world, with the most common one being the New York Stock Exchange, the NASDAQ, and in Canada, the Toronto Stock Exchange, the TSX. And again, these are all over the world, so there are different marketplaces for different areas of the world. The concept of pooled investing is what's needed to literally build massive ventures or companies like Apple, like Walmart, like Tesla. When you know these companies, you know that it takes billions and billions of dollars to start these companies or to help these companies scale and grow to make you a profit, okay? Not a single person has enough money just to start up a company. They typically bring in investors and do it together, unless you're Elon Musk. That's a different dude. He took his proceeds from PayPal and invested $70 million into Tesla and took that private company all the way public by doing an IPO. And he took it to the public on, I think, June or July 29th of 2010. But remember, he started investing in the company in like 2004. What does that mean from private to public? So companies will typically start out private, and they are not made available on the stock exchange. Okay, they're typically by investors who kind of know each other, have connections, or have a ton of money. Before the initial public offering, you know, someone like myself would have to call Elon Musk like, hey, I want to buy some of your company. And that's just not realistic. So the only way that someone like yourself or I can buy shares of these companies that are public, or these private companies that went public, is through the stock exchange, which is the stock market, which again is the place where investors buy and sell their shares of companies. And really anyone can do that if you have a brokerage account like Wealthsimple Trade over here, or whatever brokerage account you want to use. So let's talk about stock prices. Stock prices in the short term literally have nothing to do with the actual earnings of or potential earnings of the company. It's just up and down, and we'll talk about why it goes up and down. But the stock price is typically reflected on what is the underlying value of the company and earning potential, okay, of the company. Okay, so when I say that, is like how much money are these companies going to make, and that stock price should reflect that. Let's go back to the colonial ages and let's talk about how this can make more sense to you. So let's say there is a joint venture happening, a ship is about to go out, and there's 10 shareholders, and that ship comes back and made $1 million, and each shareholder of those 10 will receive $100,000 of profit because that's how much the company made. Now that investor or that shareholder comes to you and says, hey, I will sell you my stock of this company for $100,000. And you say yes. The reason you say yes is because it costs $100,000 and you'll make $100,000 next year if the company is still alive and doing well. And so it's a great deal. But if that owner says, I will sell you this stock for $1 million, that's something you have to think about, because if you pay him $1 million and the company's making $100,000 and you're making $100,000 a year from the company, it would take you 10 years to make your $1 million back. So it's just something to think about, because 10 years is long term. Do we know that company is going to be around? You have to look at the profitability of the company. Is it making money? Are there profits? And so on and so forth. Profitability is the foundation of what creates a stock price. Okay, so if the company's profitable, it will reflect in the stock price. Long term. Short term, it just goes up and down, but long term it will reflect the actual value of the company. Short term, sometimes stock prices have no connection to the company's underlying value. For example, we can give you an example of GameStop. That had no connection with the profitability of the company. AMC didn't. A lot of these hype stocks don't have relative connection. And you might make a quick buck. I'm not dissing any of those guys. I'm not dissing any of those people that invest in that company, those companies. It's just, yes, you could have made a quick buck, but that's really not investing. And to give you an idea, like how this often happens in the marketplace, if we go back to the year 2000, where the dot-com boom happened, this stuff happens because people who participate in the marketplace, maybe with a lack of knowledge, get super greedy. The dot-com boom was the exact same thing, where people would invest in these companies with sky high prices and no real profitability in the company, which caused the dot-com boom in the early 2000s, and a lot of people lost some money because there was really no actual profits from these companies. Stock prices that have no connection will correct. They always will correct. And what do I mean by that? So let's say a company is worth let's say 100,000, but the market believes it's not worth that much. The market will correct that price from 1,000 to the actual price of what the underlying assets are and the profitability of the company. And this happens both ways, whether the stock price is too high, whether the stock price is too low. If the stock price is too low, the market will bring it back up to what the actual reflection of the underlying assets and profitability of the company is. And so that is a correction. This concept literally comes from The Intelligent Investor by Benjamin Graham. If you haven't read that book, I totally recommend that you do read that book, because in that book, he talks about the concept, of the stock market being a voting machine in the short term of popularity. So a lot of times people will talk about a certain stock and people will go into it, and it's a voting machine in the short term. So you'll see prices go up and down. But in the long term, the very long term, the stock market is actually a weighing machine, and it's very precise, and it will correct what needs to be corrected and reflect true profitability and true value. So if you haven't read that book is a definitely beginner starter book to learn about investing and to really get your foot on the right path of investing. Okay. And so that is really what the stock market is. That is what the stock is. We will open this referral code here on the screen. Sorry, on this side. Go ahead and hit that like button and subscribe to the channel. It's completely free. It's totally optional, but again, completely free. And so I greatly appreciate it if you did do that. But we will go ahead and open this reward here. So as you can see here, the limited time, get triple the rewards until October 12th. If you haven't used the link down below, please do. But let's go ahead and thank Andrew for using the referral code. Thank you so much, Andrew. I really do appreciate it. And we'll go ahead and claim these free stocks here. And they're not free stocks, but they are values of the stock. So the 3 ones that we got were Credit Suisse Group AG at $13.01. We got Siri XM Radio, I think that's what that is, $7.70, and Hecla Mining Company. So we will go ahead. You don't get the stock, you get the value of these stocks. You can use the reward to buy the stock or keep the cash. We will obviously keep the cash. So deposit the rewards. It will go in the personal account, and done. So thank you again, Andrew, for using the referral code. If you guys haven't, it's down below. But other than that, guys, that is the end of the video. Have a great week, and we'll see you in the next one. Bye.